Okay, good morning everyone. It's Wednesday, May 26th, 2021. We're looking at the S&P 500 futures market here, and we're going to get started with our pre-market analysis. We do have a number of new people joining us this morning, so first of all, I want to thank you guys for being here. I know there's going to be a number, even more of you coming in over the next few days. I do want to warn everyone that we're coming into the Memorial Day weekend. We do have the trade room closed on Friday, and then Monday the market is basically closed. So we won't be open for this 4-day weekend, but we do have today and tomorrow to get things going. And so again, I do want to thank everyone for being here. I think there's going to be a lot of great material that you can learn from, and we're just going to go ahead and get started. I want to jump to my highest time frame, what I consider my super high time frame, which is my quarterly or 3-month chart here, and just point out that we've had the same situation for the last month or two. Basically no signs of exhaustion in this bull push up, and things look very strong from this quarterly perspective. On the monthly, same deal. Things look really strong, no clear signs of exhaustion. And in fact, on this monthly here, which is going to close at the end of this week, or I guess arguably, let me see here, date-wise, arguably Monday, which I think is considered like a closed day on the market where it trades for a few hours. It'll be very low volume, and then it closes. So arguably, we have until Monday for this candle to close, but essentially, by the end of this week, this candle will close. And right now, huge wick to the downside, looking very bullish. And again, we have not broken this trend line ever since the huge recovery we had after the sell-off from COVID. So things looking super strong. Also on the monthly, no signs of exhaustion. We get to our weekly here, and this is when this signal here is from last week's close, where we pointed out that we did actually confirm what we thought we were seeing the week before the candle officially closed, and we got somewhat of a bullish indication here from a weekly perspective. And you can see that this week so far, we've definitely broken the high of the previous week, and we're trying to push higher. We're not all that far from the all-time high, and so we very well could revisit that area soon here. But right now, we have that bullish indication off of the last weekly low, and we have broken up above the high of the previous weekly candle now. So things are looking fairly bullish here, and still no indications of exhaustion up here. We got these two indications of exhaustion, and these are two things I mentioned in the webinar yesterday, where we started to get indications that we were going to have a pretty significant pullback, because when you see these kind of signals on a weekly time frame, you're typically going to see a more exaggerated sell-off. And we jump to our daily here. Remember yesterday I did point out that there was a case for somewhat of a bearish signal off of the previous daily high on the 20th. So the high from Monday did give us somewhat of a bearish signal. And yesterday we did have somewhat more of a sell-off than we did a buy out of the open. And so in a way that was expected. Like I said, we had to basically break 1275 in order for us to have the bull bias. We only got to 42.10, and then the sell-off happened, which again was basically in the cards if we just focused on that daily indication. Now, right now, there's really no signs of exhaustion. So we had a little bit of signs of exhaustion when we did our pre-market on Tuesday on the daily perspective, but now you can see we pushed up to a new high, and if I go ahead and redraw over here, we pushed to a new high on RVI. So really no signs of exhaustion just yet. And then we have this current candle, which has all day to develop. So we don't have much to be said about it right now. All we can say is that from the previous candle that has closed, we don't have any signs of exhaustion. So now we can go from our ultra high time frame all the way down to our high time frame and see there's really no signs of exhaustion. And I'm going to go ahead and delete this line, because I only draw these lines on if there's divergence, so I don't want to confuse anyone. Currently, there are no divergences here, no signs of exhaustion. When we go to our 4-hour, remember yesterday we said off the high around 1275 in the pre-market, there was no sign of exhaustion here. We only saw it on the daily, and then on the other side on the 60-minute and the 30-minute and all that. And so right now what I am noticing is we do have a pretty nice bullish indication off of the previous daily low. So if we look back to the previous swing low back here, especially down here on RVI, we pushed up in price to make the higher low off of 41.79 but the RVI actually pushed to make a lower low. And so we definitely have a pretty nice bull signal here off of the previous daily low. But currently, I would argue that we actually have somewhat of a bearish indication off the overnight high. So we'll have to keep this in mind. We'll jump down to our shorter time frames. Remember, really quickly, we're in a huge chop area here, and we happen to be right around 50% of the previous daily price action. So we're right in the middle of yesterday's price action in a chop zone. So it's going to be a little tricky in here. I do want to point that out. So we might not have the stars align this morning, but we definitely do have a really nice bull divergence off the overnight low. And now you can see a little bit of exhaustion on the 4-hour chart here off of the overnight high. So we're probably going to start to create some conditions here for what kind of bias we're going to want to have this morning, depending on what levels we can hold. So we're probably not going to necessarily have the stars align, but we definitely will have nice conditions to follow for some ideas for trades this morning. Again, on the 60-minute, I would have preferred to have a really nice push down in price here, and then have the RVI have a nice push up in price, or something that gave a nice divergence right there off those two local lows. But we do have to kind of extrapolate here back to the previous lows where we did for the 4-hour, and from that point we do have a very clear bullish divergence. And then just like on the 4-hour, right in this area, in fact, you don't really get the divergence until this push up at about the candle that closed at 5 a.m. We pushed just a little bit lower, but the RVI pushed just a little bit higher. So now we have that 4-hour and the 60-minute agreeing both on the bullish indication from yesterday's low and a bearish indication in this in the last basically hour off of the high around 42.04. So we do need to keep in mind we're probably going to have a number of conditions for bias this morning. And let's jump to our intermediate time frames and just see what they have to say. So when we go to our 30-minute, and let's just see if we get agreement off of that high. So the 30-minute isn't necessarily agreeing, at least I don't think I see it here. We definitely pushed to a lower high, pushed to a lower high over here. As far as the overnight or the previous daily low goes, we would have to extrapolate all the way back to that same swing low that we were looking at on the 60-minute and the 4-hour in order to really see the divergence, which is not necessarily what I like to do, but it's definitely something that can be made as far as an argument. I really would have preferred to see it push down here and then have this RVI push up a little bit, or at least stay flat. And you could argue, actually, now that I look at it, we do basically have a nice flat RVI and we have a lower low on price. So we do have the same bullish indication off the overnight low in the local region, which is what I'd like to see. And then we have over here, we don't necessarily have a clear bearish indication. So the 30-minute is not confirming what we see on the 60 or the 4-hour. So remember, like I said this morning, we're right in the middle of yesterday's price action and a huge chop zone. So this is not going to necessarily be a morning where the stars align and we have a perfect bias for the open. It's going to be probably a little bit messy in here. So let's see what we got on our 10-minute. And we'll zoom in. We'll take a look at the low that we made overnight or from yesterday. And again, pretty nice bullish divergence here. So pretty much every time frame gave us a bullish indication off the previous daily low, and then we have a few time frames giving some bearish signals off of the highs in the overnight market. You can see that you could make an argument here that we essentially pushed higher by a little bit, but the RVI kind of stayed a little bit flat here. So there are some arguments to be made on the 10-minute for a little bit of bearishness over here. But I'm also noticing that we also have somewhat of a nice bull indication right now. So it's, again, super messy this morning, but we do have our conditions. Pretty much every time frame is giving us bullish indications off the previous daily low. And if I could get this right, put that in. And so we ideally, for a bullish case this morning, want to stay above 41.79 in order for basically every time frame to hold the bullish indication. So if we cannot stay above 79.25 this morning, that will basically negate all of our bullish signals. And so that's going to be an important level coming into the open. And this 41.85, just as important as it was yesterday and the day before, is now also a pretty significant area just because of the support and resistance we're getting in this at that level. And so as we come down, we could potentially look for a nice clear buy signal to try it long. And same thing down here at 79.25, but we do need to have a short time frame divergence, meaning we have our 3-minute, 1-minute, and 5/12 agreeing for the trade. So currently we do have the 10-minute indicating somewhat of a divergence off the low. We do have it here from this candle that closed, and now we have another candle that still has 7 minutes to develop. So this picture could change a little bit, but for right now, I do want to keep that in mind. We do have that one little bearish signal off the overnight high, and so it's kind of where we're at right now. Ideally, for the bulls, they're going to hold above 79.25 here to go up and push and at least break through the previous daily high at 12.25. Now we will have the overnight high to contend with, and we do have the prediction points in the way. And we know how important the prediction points are. In fact, in the overnight here, you can see how well the prediction points have been holding for some of these tests. Basically holding the upper KP here multiple times, broke down, came up and held the second KP here, came down, and look where we bounced directly off the prediction point, which also happened to be 92.25, a level that we've been watching. You can see it a little bit clearer here on the tick chart. And again, a nice bull divergence off the low, just like we saw on the 10-minute. So we'll see how far this can actually push into the open. I do want to just jump to my 3-minute just to see what it's saying over here in this most recent local area. Now, if we go back to that previous daily low, you can see from the previous swing low, pretty nice bull divergence as well over here. And so every time frame gave us bullishness off the low there, and then a few time frames gave us some bearishness off the overnight highs. So we'll see who actually wins out here. Again, this is one of those mornings where the stars are not necessarily aligning in this area outside of the bullish indication that we have off the previous daily low. So the stars aligned from there, but the problem is we pushed from 79 to 0350, 04, and so we already got just about 24 point push out of it. And although almost every time frame is giving us an indication from here, that could be all we get, just because of all the difficulty they've been having in the overnight in getting up above. If you look at this level 0350, this is just, again, another testament to how powerful the levels are that we identify in the trade room here. 0350 has been on the charts for a little while now, and it was an important level we were watching about a week ago as well. And you can see all of the resistance in the market here. Then it became support, really nice support. We broke through. When we came back, really nice resistance off of it. And so we're really going to want to break through that this morning as well. So we'll keep it at that. We have 5 minutes until the open, and we're going to have to essentially take it piece by piece. Now we do have this leg to look at from a retracement perspective. So we have the low to the overnight high. Again, really nice confluence right over here at the CP and that 92.25 level, which is not marked here on the 3-minute chart. So let me just copy that over. I do have to put them individually on every chart, so sometimes in the mornings there's a few levels that are off. We did have 91.50 on the 3 minute from a long time ago, and coincidentally that is essentially where we just bounced, and we bounced earlier in the overnight. But I'm going to get rid of that, throw the 92 quarter in, and just point out that just looking at this from a Fibonacci perspective, we pulled back and bounced to the tick directly off the 50% retracement, which also happened to be 92 quarter, our important level, and is also the CP, the prediction point right there. So not too surprising that we actually found some support there, but now it looks like we might just be selling off now. So assuming that this 3 minute stays at this level, we have somewhat of a bearish indication right here. And Awesome Eye CME just said in the chat, exotic divergence forming on the 3 minute chart, and that's exactly what I just pointed out here. From the previous high to the high we just made, we did get a bearish indication. Now if we go down to our short time frames, we would want to have confirmation over here, and we actually do have it as well on the 1 minute and the 512. Actually the 512 does not necessarily have the same indication. Well, I guess you could make that double top argument, right? So there are some bearish indications right now, 3 minutes before the open, off of this current high. But remember, once this high breaks at 94, or at least breaks where the divergence is forming from, 94.50, that signal will be negated. So you very well could take a short here, keep your stop above 94.50, but you're starting to take on a little bit more risk than I really like. It will be below 2 points of risk. So if you took, say, 93, you would have your stop around 95. And we are breaking down now, coincidentally. Again, just a beautiful testament to these signals. 3 minute, 1 minute, 512. We told you right when around 93 quarter, we were seeing the bearishness on all three time frames. And there's that 2 or 3 point drop in just a matter of seconds here, right off of 90.50. So again, a key level we've been watching at 90.50, just got a nice bounce from. So we have just about a minute until the open, a minute and a half here. We're going to look and see if we can get a nice clear setup. But remember, we have our conditions pretty bullish off of the previous daily low. If they cannot hold somewhere above that, or at least hold at this level and continue up, we will no longer have that bullish bias off the previous daily low. And then we do have some bearish indications off the overnight high. So we basically need to break above 04 quarter, which is the overnight high here, in order to really have confidence in the bull bias. So hopefully that helps everyone. We've got just about a minute here, and it does look like we're going to potentially have a little bit more of a pullback here. And again, I want to thank CME Cham 86 for pointing out that we had that bearish indication on the 3 minute. And it was a bearish. I think you put in the chat bullish forming, but I actually see a bearish signal there. That's the one that I pointed out. So 3 minute, 1 minute, 512 from 94. And then again, coincidentally bouncing at 90.50, which is the level we've been watching. You can see how much resistance was in the market back here at 90.50. And again, I don't have it copied over on my other chart here. Just because sometimes we put a level in, but it doesn't copy over. So really nice bounce from there, and we just opened. So we'll see what we can do here. And get my 3 minute up on here. Decent bull divergence there off 90.50. So we could see carry through to push up, but we are potentially going to find resistance at the CP here. So let's just see what happens. Yeah, 100%. We started to get the bullish indication at 90.50. So again, this is another testament to taking a trade at a level with a signal. And if the level works, it's going to launch off the level. If it doesn't, then you get stopped for a small loss or break even or whatever it is. And you just, are back to looking for your next good trade.